Hi. So I mentioned that if you've seen some of my prior videos that every week or so I'm going to do a show just on interest rates. Whether it's because you want to go buy something or you want to consolidate some debt, your four categories of your credit cards, your personal loans, car loans, as well as mortgages. And those rates will vary, of course, based on your past payment history, things like your income, your credit score. But I'm just going to go over the average for these various things. But before I do that, I want to show you these two articles, because a lot of times people can get down and feel like things are out of control and they have no way out, so they don't bother dealing with their financial issues if they're in debt. The first one shows that today, 30% of Americans in these top 10 cities are behind on debt payments. So if you think you're the only one, you're not. And also, people are behind on their car payments at a record rate. So I'm not showing you that to say, look, people are screwing up, this is terrible. I'm showing that so you can say, gosh, I'm not the only one in this position, and you're not. Forget what's happened in the past. What matters now is what you start doing today and what you do tomorrow. So you need to start consolidating debt, getting out of debt, making changes to your budget, you name it. I've got videos on how to make a budget, how to check and see what your highest interest rates are. Essentially, you want to start tackling your highest interest rate items first, get rid of that debt, and then move down the list. So now let's get into the rates for this week and compare them to last week. So here we are looking at the various types of rates. We'll go through credit cards, personal loans, cars, and mortgages. This article here was January 16th, just a couple days ago, and it's got for average interest rate on credit card offers. If we just look at for all new card offers, they've got the minimum and maximum APR and the average. The average is 24.59. We'll throw that up here at the end and compare it to the previous week, but essentially it's about the same on credit cards. Let's move over to personal loans, and I'm going typically down, meaning credit cards are usually the most expensive interest rate, and then personal loans, and so on and so forth. This was as of January 16th, and they said the overall interest rates were 20.73%, and that's up from last week. They've got rates. They show here the overall average. That's what I like to look at. Last week's 20.68 and now 20.73. Not a huge difference, but they have gone up, and that's different than obviously going down. And it depends on many different factors, as we all know. I'm not going to get into that yet again. Here we are with the rates for used cars. They break it down by credit score, which I think is incredibly helpful, but you can still compare it from this week compared to last week. Here's the new car column and the used car column. You can see that what a difference it makes when you've got a great credit score. Just the difference between, what they call the super prime, never heard it put that way, and let's just say non-prime. That's like 5.5% to 10%. I mean, it's almost double the interest rate. And that's not a huge difference in credit score. That's for the new car, and used cars are more. So there are the rates compared to last week. And then I just wanted to show you, because I love this Car Gurus, where they allow you to put in dates. So I have it back to 2018, just like I did last week, and then up till now. And I picked just these four cars to look at: SUV, crossover, pickup truck, minivan. And you can see the trajectory is still down. So compared to last week, the average used car price for these various things is still on the decline, and that's a good thing. Although interest rates are high, but at least it's good that the price of the car is going down, particularly if you're paying cash. Not saying now's the time to buy a car, it's just nice to see them finally going down. And then we're going to look at mortgage loans, and I always keep the same data here in terms of your credit score, down payment, the state I'm looking at, and the loan amount. So you can see 30-year rate 7.54, 15-year fix 6.56. But there you go, there's the 30-year fix. That's what everyone usually talks about. And you can see this little trajectory here where they seem to be sort of flat, but at least it gives you an idea. And now you have a better idea of, when you're trying to get out of debt, what the current rates are, where you might want to move money, what you might want to pay off first, etc. Hope this helps. All right, so now that you see what those rates are, compare that to the rates that you're paying on your debt and see if it would make sense. I've got multiple videos on how to balance transfer to credit cards that may have a 0% rate for a certain amount of time, 12 months, 15 months, 18 months, 21 months. It can save you a substantial amount in interest. And as long as you're not increasing your debt, you'll be able to get out. And you can use calculators to determine when that can happen. Then you've got things such as balance transferring over to a card with a new purchase APR, some tricks to do that so you can avoid transfer fees, how to use things like a car refinance to get rid of higher interest rate things and move it to a lower interest rate item. And then, of course, there's things what they call such as velocity banking and other ways to help get out of debt faster. I'll put links to some of those videos below, and subscribe, go to my channel, and you'll see all the videos. I always appreciate a like. It helps push this out to other people. Thanks, and we'll do this video in another week or so and compare yet again. Thanks for watching.